Hello, Tim Storm here. Hope you had a great week. So it is Friday, March 10th, 2023. Here is your update. And this is the update that I've been waiting to give for a couple of weeks. So we've had this date on the calendar for a while because the jobs report came out this morning. Now the jobs report actually came out a little stronger than was expected, which on some days would affect mortgage rates negatively, but there are some things within the report that are being interpreted in a positive way for mortgage rates. So we're getting a big rally with mortgage-backed securities today. Hopefully it will continue on. It's going to be a volatile day. There's going to be some profit taking on the mortgage-backed security market, bond market, so that could affect things throughout the day, but hopefully this is the catalyst that's going to help rates. Now when we look at the charts, let's go back to February 3rd. February 3rd is when the jobs report came out last month. There's some big seasonal adjustments in that report. You'll see the interest rates, well actually you'll see the cost of mortgage-backed securities slid. Now when mortgage-backed securities go down, interest rates go up. So it's the inverse relationship that we're looking at. So now look at this other chart. So this is from Mortgage News Daily, and it shows when the jobs report came out, interest rates were around 6% on February 3rd. Then the CPI came out about a week after that, and mortgage rates went up all the way to 7%, which is basically where we are right now. Today, we've got the jobs report that came out and it's being interpreted positively. We've gapped up. The CPI index will come out on Tuesday, so hopefully that will continue on with some improvement with rates. I'll keep you updated on that. Now, the thing I want to talk about today too is the DSCR loan program. Now the DSCR stands for Debt Service Coverage Ratio Program. Now on a side note, back in 1989 when I first got in the business, I actually was in commercial real estate lending. And the debt coverage ratio is what we looked at. So we're basically looking at how much rent is coming in on the property and what is the full mortgage payment going to be. So with residential loans, say that you've got a $5,000 rent coming in and your mortgage payment is $5,000. That means your debt coverage ratio is 1.0. And that'll work on this program. There's even programs where there's guidelines where we can get it done when the debt coverage ratio is under 1.0, meaning that the rent doesn't even cover the full mortgage payment. Now, the loan to value is probably got to be lower, probably going to need good credit, and you're probably going to need a seasoned investor in that case. So every situation just depends. If the debt coverage ratio is, say, 1.15, that means you've got more rent coming in than what the total mortgage payment is. And those are a little bit easier to get done. The interest rate might be a little bit better, but again, it all depends on the borrower, their experience, FICO score, etc. Now, the big advantage for an investor on these programs is they don't have to give us tax returns. We don't need to look at their personal income information. And a lot of investors are self-employed, they've got the money, but they don't have the income on their tax return, so they can't really go on a full doc loan. They need it to be an easier process, and this gets that done without resorting to going to a hard money source, because hard money can be double-digit interest rates and even more down payment. So if you would like to see how a DSCR loan program would work for one of your clients who's looking at investment properties, let me know. I'll put something together, put together a purchase analysis, and actually I even have a different software I use for a full investment property purchase analysis, and so I can get that out to you too. Other than that, hope you have a great week. Tuesday is the CPI, so we'll be looking for that. And also remember, this weekend, turn your clocks, spring forward. So yeah, don't fall back, spring forward. It's gonna be darker in the morning. So that's it. See you next week.